Good afternoon, everyone. Welcome, HW&Co clients, colleagues, and friends. This session today is all going to be about fraud. It's going to be really anything and everything you want to know about fraud. Now, specifically about fraud could be a lot of different things, right, in our lives. It's specifically going to be about business fraud and occupational fraud, all right? And we also we have a lot of information, a lot of metrics, a lot of statistics coming from the ACFE, which is the Association of Certified Fraud Examiners Global Fraud Report. It's what they call as the report to the nations. It comes out every 2 years. It's really good information. It's a survey that goes out to all the CFEs. There's a lot of litigation, a lot of fraud cases that is surveyed, and a lot of good information comes out of it that we'll report on here throughout. My name is Tony LaNasa. I'm a CPA and a certified fraud examiner with HW&Co, the managing principal of our Columbus office, and I'm also the director of our fraud and forensic group at HW&Co. So we don't talk about fraud without talking about the fraud triangle. So hopefully everyone has, if you've listened to fraud sessions before, you probably have heard about this fraud triangle. So we'll speak on that. I spoke about a risk assessment. So we'll speak on a business and fraud risk assessment, what that means, what businesses can do to really minimize and reduce financial statement and fraud risk. Fraud prevention techniques, we'll speak on that. And we have a session here with just the top 7 controls that really every business really should have. So we'll speak on that. And as I mentioned, we'll have scattered throughout the session today just some metrics and some information and statistics related to this report to the nations in 2024. The report just came out this summer, so it's hot news that's out for a lot of the fraud side of it. So fraud triangle. There's 3 aspects of mainly a lot of business fraud that occurs. Okay. Now, there is other experts outside of the financial side that at times, a lot of cases, a lot of fraud and litigation potentially doesn't match the 3 aspects. But mainly what we see in business fraud and occupational fraud is you have these 3 aspects of most fraud that occurs. And first, it's pressures, right? You have pressure on individuals, you have pressures on organizations. And depending on the amount of pressure, then there's some issues there potentially that you move forward with rationalizing some behavior, okay? Now in the middle of that, there's an opportunity, right? So you have to have opportunities to commit fraud. And we'll speak a lot about that in this session. Really, opportunity means internal controls, processes, procedures, oversight, overview, things like that. So if there's opportunities in businesses, because maybe there's a lack of segregation of duties, there's not enough oversight overall, and if there's enough pressure on individuals or maybe an organization, that person or organization then rationalizes behavior and decisions to commit fraud. And we'll talk more about that on every level. Personal financial pressures. So you can see that obviously there's lots of different things that happen in all of our lives and all of that, standard of living beyond means, the keeping up with the Joneses down the street, right? Your neighbors, they just got a nice patio, and they got a nice hot tub on their patio, and you're trying to live up to their standards, because they're your neighbors. You have personal debts and poor credit, student loans. That's a big ticket right now, student loans and the pricing of colleges and all that. Vices, right? That's a big thing. In Ohio, a couple of years back, the sports gambling was allowed a few years back. So now you can just jump on your phone, download an application, and start gambling. And what you've seen now in the last few years now, because of that issue, is a lot of people then are getting more in debt with that. And now they're looking for other avenues to pay for that debt, which one of them would be committing fraud. So you actually see an uptick in fraud in Ohio because of that sports gambling that was allowed here a few years back. Changes in life situations, right? Loss of of a job from a spouse, or maybe your mom and dad's coming in and living with you now because they need more care. So there's more funds that you need to care for them. So a lot of things that happen in someone's life that puts pressure on ourselves. And some people have more than others, but there's all pressures on all of us throughout our lives. Moving into the organizational financial pressures. So staffing issues, we all know about that, right? Staffing issues, staff retention, finding good people. They're obviously with the last few years, especially through the pandemic, we've seen a lot of that. And because of the staffing issues and all of that, you have increases in potential workload for others at the organization. So you have potential there where what that means is maybe segregation of duty issues, right? Lack of segregation of duties, and having one person doing too many things and having a lot of responsibilities. Reimbursement reductions overall, right? Federal, state, local reimbursement reductions. Shrinking budgets, increased costs. We know all about the increase in costs with inflation in 2021 and 2022 has kind of subsided a little bit over those years, but we're still there. Costs are still high, and because costs are still high, your bottom line's shrinking, right? So to make those debt covenants that you have potentially with the bank, because you have bank debt and you have a shrinking bottom line, what do is you look at other avenues. Potentially that could be financial statement fraud, right? So, and we'll speak a little bit more about that in a little bit. Regulatory pressures, compliance pressure, reporting pressures, all the stimulus that came through, during the pandemic. There was a lot of reporting back to the funders, the agencies related to that, and someone had to understand all of that and do it right. So there was a lot of regulatory pressure with that, and there's always pressure on compliance and everything as far as the federal government and state and local. This is just like a very simple visual here, so you can see opportunity. Like when we talk about opportunity, as I mentioned before, internal controls, processes, procedures. You can see as you increase internal controls, you decrease opportunity, right? Pretty simple. So the amount of oversight you have, the amount of the control processes and a strong environment you have will decrease the opportunity. And with this, we talk about the rationalization side, and there's a lot of us that have all this pressure, and we do rationalize behavior every day in our lives, right? Maybe not to this extent with committing fraud, but a lot of people do that. They rationalize behavior based on the pressure they have, and they have an opportunity to do it. So what we as fiduciaries and directors of businesses, what we have to do is really take that out of the equation, take that opportunity, or potentially take as much as we can of that opportunity out of the equation, because a lot of us will make the wrong decision because of the pressure on us. And by doing that, you can increase your internal controls. We have lots of clients at HW&Co that they're small. They have small business offices. They have maybe one or two accountants that are running the books and all of that. So it's very hard to segregate duties. But there's other ways to try to reduce potentially some of that risk of fraud. And again, mentioning management review, oversight, and all that you can incorporate. Also, too, you can incorporate some of the technology that we have as well, which is nice to have. So this rationalization theory, I don't think you're really going to see this in any books, but through the experiences that you have and all of us have, you really know that, like, really, and I'm going to put some numbers to this. Really, and this is not in any books that's going to tell you this is what it is, but what I think is maybe 5% of the population is dishonest all the time. That's just their mentality, right? That's their thought process. They're always, at times they may not even think they're being dishonest, but they are being dishonest, and that's a small percent of the population. And then you have the other extreme where a person, 5% of the population is completely honest. Doesn't matter what pressure is on that person, what situation they're in, they're going to be completely honest 100% of the time. And then you have all of us, most of the population, most of us, that what we call a situationally honest, where depending on the pressure that we have and what level it is at, and depending on the opportunity we have, we may make the wrong decision, the wrong choice. So again, coming back to that, we as fiduciaries of businesses, we really need to take out that question out, that opportunity out as much as we can. And we'll speak more on that here once we review internal control processes. So staying with rationalization, you hear all of these, in different cases, and you hear this in your everyday life as well, in different situations. Everybody's doing it, so why can't I participate in it? I'm just borrowing for now. You hear that a lot in fraud cases where some of these fraudsters, maybe by error, they find out, well, wait, what happened here? I made an adjustment here, or I ran a disbursement here, no one found it, and it was actually wrong. So at first, maybe it's by error, and they know that no one really detected it, and then they at that point they say, well, you know what? Maybe because I have this debt that I want to get paid off. Maybe short term, I'll just steal some funds. I'll pay off my debt, and then I'll pay back the company. Obviously, we know that never happens. It just keeps getting larger and larger, and all of that. With all, I mentioned the stimulus funds that a lot of companies and individuals and all of that received over the years here recently. There was a lot of businesses that had a lot of cash, had a lot of liquid cash at that point. A lot of accountants, a lot of business office managers, a lot of people saw that, right? And they saw opportunities there where there was a lot of cash there. Why can't I take some of it as well for my family, right? So just things that people rationalize, and all of that through the process is pretty interesting. As I mentioned, the report to the nations in 2024 just came out a few months back. There was over 1,900 cases, fraud cases, that was surveyed through CFEs. So a good, it's been about that. Like I said, it's every 2 years it comes out. It's been about that number of cases over the years, probably around 1,800 to 2,000 cases. So a good amount of cases overall, and a good metric to take a look at. Just quickly, occupational fraud, business fraud really is just using employers' assets and an employer's resources for personal use. That's pretty much it. That could just be using paper and pencils and pens of the employer and bringing it home to use it personal, which, yeah, okay, that happens. But it could be as much as stealing inventory, stealing cash of the business in somehow, some way, based on the opportunities that there are with the business. This is kind of a busy slide, but on the left part is the fraud tree, right? So there's 3 overarching categories of fraud. One being corruption, asset misappropriation, and financial statement fraud. And then you can see all the schemes underneath it. So a lot going on there. Under asset misappropriation, you can just see all of the schemes with cash, liquid cash, as well as inventory and other assets. On the right side, you can see the number of cases as well as the dollar amounts of between each of the 3 categories. The most cases of fraud, business fraud, is asset misappropriation. And that does make sense, right? So if you see all the schemes underneath it, it makes sense that happens a lot. Again, it comes back to internal controls and businesses not having those controls in place and not having that oversight. And then if you look at the dollar amounts, you can see a significant amount of dollar loss relates to financial statement fraud. And I think ultimately what that means is if you're gonna, what they call is cook the books. If you're gonna cook the books, you're gonna go big. You're not gonna go small. You're gonna go big because you might as well. You think about, I go back to that example with debt covenants and trying to make debt covenants and financial statement fraud. If you're really gonna, if you're at the end of this year and you're not making your covenants, and you know that bank's going to be all over you, they're gonna charge you more fees. You're gonna have to go through potentially some forbearance agreements or something with the bank that just prolongs the process. You don't want to do it, so you cook the books, right? So what you do is, yeah, maybe I bring some revenue from in 2025 that should have been in 2025 because it was, say it was delivered in 2025. However, I'm going to bring it in at 2024 so I can make that covenant. Typically, those adjustments at the end of the year are big adjustments. They're going to do that big and not small to make potentially what they want to make the bottom line look like. So again, just looking at all of that, there's a lot going on there for sure. This slide, the left part of here, the report to the nations, for the most part, what they see is about 5% of top line revenue is fraud related. So you're going to lose 5% of top line revenue to fraud each year overall. That's obviously on average, but typically that's what every business sees. And then in the other slide, another picture here, you can see the median losses. And this is compared to 2024. So you see 2024 and 2022 median losses between the three categories. As I mentioned, financial statement fraud is the most, but you can see in all three categories are higher than 2022 and significantly higher. I don't know if that's because inflation, right? And fraudsters are just being more greedy because of that or whatever it is, but it is a lot higher, significantly higher from the prior report. The one person talked about, what was it? The staff timesheet fraud, so charged to clients he did not work for. So the he was interesting there because if you look at all of the metrics here, typically males are the fraudsters, are the perpetrators. So 74% of all cases here in this survey related to males. And then positions and titles, you can see obviously, if you see business fraud and occupational fraud, it's mainly internal. You're just having mainly internal, so employees, managers, officers, owners, and all of that. But what we try to do with all of these metrics, and we'll have more here throughout, is what we're trying to do is really trying to profile the fraudster, and then increase controls related to that profile. So profile the fraudster, and then increase our controls to reduce the risk of that profile. So we'll talk more on that. Of the cases, median loss was about 145,000. And this is pretty interesting. The median duration was 12 months. So a whole year, the fraud was occurring. What that says to me is we talk about preventative controls and detective controls. Obviously, they never had a preventative control, right? Because the fraud occurred. And there really wasn't any detective controls because it took 12 months to find the fraud. We'll talk a little bit more about that because in certain titles and positions, it's going to last longer, the fraud, based on potentially oversight or non-oversight of that position. And then 22% of these cases had at least $1 million of a loss. So significant losses of a business can happen here with occupational fraud. The departments, so this is what I'm showing here is the last 3 reports, so 2020, 2022, and 2024. You can see the consistency of the years of the surveys, but this is by department. So, again, it's not surprising. Operations, accounting, that's pretty high. You have more access to potential resources of the business. But I think in this slide, what this says is really every department there's risk. So you can't just look at the accounting department and try to understand what controls are, how to enhance controls. You really need to look at your whole business and your whole line of business operations, department, and all of that, and kind of take a look at that as a whole, and then trying to, at that point, try to reduce the risk overall in each of the departments. So this is getting into the tenure of a perpetrator, so the tenure of the fraudster. So you can see that the highest percentage is 1 to 5 years. All right, so if you think about that, 1 to 5 years, probably at that point, that person, the employee, maybe doesn't have that much loyalty, right, to the owner, to the business yet. So that loyalty hasn't really built up yet. In this day and age, maybe they have a lot more responsibility with less experience, because we get back to that those staffing issues. So there's a lot more responsibility. There's a lot more tasks to do. Maybe there's lack of segregation of duties in that. So you see that there, but you also see, even if you look at 6+ years, if you take those two demographics together, that's 46%. So even with people that have longer tenures, the number of cases is significant as well, right? So if you get back to that profile of fraudster, it's hard to kind of profile the tenure of a person because it's really happening everywhere, and in all the years of a person and their tenure at a business. Tenure compared to the actual loss of a fraud. Now here, this is a big difference now. So you see the 1 to 5 years, that dollar loss is kind of in the middle, but then you see 10+ years of tenure is significantly higher than the rest. And when you're looking at a business and business fraud, occupational fraud, that's what you really want to look at, is what's the impact, dollar impact to the business. Now you don't want any fraud to occur, but what's the dollar impact overall to the business? And people that have 10 years or more of tenure at a company steal a lot more money, a lot more dollars. Okay, so getting back to that profile, maybe you take a closer look at those with a little more tenure at the business, right? Because maybe they have, like maybe the 1 to 5 years, they have the responsibilities that they have, but they have likely they have the trust of the business, of the owners, of the officers of the business, because they've been there that long. They have all that experience. And because of that trust is there, there's less likely oversight and management review. So you still have to have those controls in place, because if you look at the statistics here, more money stolen from people that have longer tenure. This is kind of a breakdown by age group here. So you can see as a person gets older, they steal more money. 60+ is the highest dollar amount. You can see that the step up on each of those age groups. So again, getting back to probably not enough oversight of those individuals because they're trusted, they have a lot of experience, they know what they're doing, they've been doing it forever, but you still need to have some oversight with them because they steal the most dollars. Also too, you get back to that duration, because there's not oversight in the tasks that they're doing, the duration of the fraud is longer, and then there's more dollars being stolen because the duration is that long. Background checks, so we're talking about a little bit on the HR side now. So background checks, you can see the different types of background checks, employment history. Some businesses don't have any background checks, so just a lot going on there. I would suggest all businesses should be doing background checks. You can see the different things you can do here. Now I say that, this is a criminal background check, I say that, but typically there's no issues that come through background checks, right? You do a background check of a potential hire, no issues. Now it's the 1 or 2 times that you do find issues and then you don't move forward with somebody. That's why you do background checks, right? So it's not the 90% of the times that nothing comes back. It's that 1 or 2 times that you do find out something and then you don't move forward with that person. Employment backgrounds, again, same thing. Really typically you don't see any issues with employment backgrounds for the most part, but employers should be doing it because, again, it's that 1 or 2 times that happens where you find out something and you don't move forward with someone. We'll talk about behavioral red flags as well. So 84% of fraudsters in the surveys had at least one behavioral red flag. And lots of times employers they ignore it, they kick it under the rug because they don't feel it's an issue. Maybe they're having a bad day, maybe they're having a bad week, maybe they're having a bad month, right? So they just ignore it. But you can see the different types of red flags that come up. A lot of it comes back to the financial side of it, right? Living beyond means, keeping up with the Joneses, the neighbors, and all of that. And you can see all the other ones here. We'll talk about incorporating a fraud tip hotline, which is very important for businesses, because that's when employees, if they do see some red flags in other colleagues, they can report it anonymously to this fraud tip hotline. We'll talk a little bit more about that. You can see the median losses, excess pressure within the organization. That comes back to the financial statement fraud, so that's why it's so high. You can see the durations. So bullying and intimidation is the highest durations of these cases. And I think that really comes back to the management group, the officers doing that, doing the bullying, doing the intimidation, maybe overriding internal controls that are already in place so they can commit fraud. And that's why the duration is so long, because they don't have that oversight like maybe lower levels of employees. HR issues here, you can see just the different things that happen, with benefit cuts in pay that frustrate employees, and then they commit fraud if there's an opportunity. Right? You remember that pressure on people, so you have pressure on people, and then if there's an opportunity, they rationalize their behavior based on maybe a cut in pay. They're worth more than that. A denied raise, things like that. Concealment methods. So this is what really all of these concealment methods by the fraudsters comes back to just creating fake support. And with technology these days, you can create anything you really want. You can create bank statements. You can create checks that look almost exactly like the originals. There's so many things you can do with technology nowadays that it's very easy to create fake documents and make them look like real. So, one of the things coming back to that is having a preventative control in front of that, where some of these fraud, the fraud cases, it doesn't occur because there's a preventative control in place. Collusion, and this makes sense, right? The more people involved, the more money's stolen, right? Because you have collusion involved, and you can see that here. So, if you have one person, right, it's maybe less likely that's going to be a big fraud potentially, unless it's maybe a small organization or there's no oversight. If you have 2 or 3 individuals, maybe across departments as well, then you have more opportunities to steal funds and resources of a business. And then, so moving into the risk assessment, business fraud risk assessment. Really, a risk assessment is really just asking questions to your personnel, even people outside of the business too. Just asking questions. We do this in our financial statement audits, external financial statement audits. We ask questions about fraud to personnel, like how can you commit fraud? And we get some interesting answers with that, but really it comes back to asking questions, getting answers, and then once you get those answers, then formulating a risk assessment around it. I mentioned the preventative controls, detective controls, right? So again, pretty self-explanatory. The detective controls are not as good as preventative because you really want those preventative controls up front. However, preventative controls at times cost more money, more time, more effort. So depending on your business office, finance people, you may have to just have a detective control after the fact, just like that one fraud that occurred with bank rec review on a monthly basis. This is just a simple risk matrix that businesses can use. What you do here is you categorize the different tasks and duties and areas of a business, and then it determines what kind of control priority you have. For instance, payroll is likely that it occurs, right? It occurs either bi-weekly, monthly, weekly, all of that. So it occurs a lot. And what's the impact of the business? Very significant. It's high dollars to a business, typically, a payroll is. So, really in that function, on a payroll function, you really need to have a control priority. You have to have controls over that area. Compare that to the building that you're using, right? What's the likelihood that your building is going to go up in flames and get set on fire and all of that? probably unlikely, right? So it's low. However, it's a major impact to your business. So in that case, you get property insurance, building insurance for that. So there's different things that you actually categorize, and based on the categorization of things, you prioritize what is really a high likelihood of occurrence and a major impact to your business. Also, like the risk assessment too, it's really ongoing. Based on, that could be based on personnel changes, environment changes, industry changes, things like that occur. So it's really ongoing. It's not like you just do it once and then you're good to go for a while. You really have to revisit that on a periodic basis, really based on changes in your business. What we try to tell clients is try to have someone that leads a risk assessment, and then that person then is in charge of updates to it based on personnel changes and changes to the business overall. One of the resources that I saw was this fraud risk management guide. It's offered through the ACFE and COSO. So this is kind of nice. You can download it. If you're not an ACFE member, it might cost a little bit, but it's not that much. You download it, you can use it as a guide to help you through that risk assessment of your business. Fraud prevention. So most common changes to anti-fraud controls, you can see them here. We talk a lot about management review, oversight. It's big. So if there's an issue, there's potential lack of segregation of duties, you add maybe some management review to that, some oversight from that. We see a lot of data mining, data analysis, things like that. So being proactive with that, with all the data, with all the technology that we have right now, and you can see the others as well there. The primary issue that we see with fraud, business fraud, is lack of internal controls, right? We've talked about internal controls for the most part this whole session. So lack of internal controls, also overriding existing controls. So you have controls in place, you should be following them, but management and others are overriding them, right? So that's a big no-no in business. And again, coming back to that management review, lack of management review. Potentially there's a lack of management review, or maybe someone's not doing what they should be doing. Maybe there's a control in place of a review, but they're not doing it. So the most cost-effective way to limit fraud is to prevent it, right? To prevent fraud, so those preventative controls. But at times those preventative controls can be costly. So you have to have a good mix of preventative and detective controls. And it comes back to questions. Asking questions overall with a risk assessment. Are you training your employees? We talked a little bit about this fraud tip hotline. Do you have a fraud tip hotline? Are you using it? Is it effective overall? Tone at the top is huge, right? What's the tone at the top? If the tone at the top is not honesty, integrity, everyone underneath is not going to be honest and have integrity. So you have to make sure that tone at top is right. And then overall, just having the right mix of anti-fraud controls in place for a business is very important. Top 5 fraud prevention approaches. So we talked about behavioral red flags. So beware of red flags. 84% of frauds have at least one red flag. Having a strong system of internal controls. We'll talk next about a top 7 list of controls that everyone should have. The fraud tip hotline doesn't have to be a phone call. It could be web-based, it could be email. There's lots of different avenues to communicate to either compliance officers and others about potential issues or red flags in a business. And then utilizing good anti-fraud controls. And as I mentioned before, utilizing potentially some data analysis, mining, extraction overall on a periodic basis. Now, getting back to the control processes here. So here are the top 7. So I know a lot of businesses, maybe there's not that much mail coming in because maybe a lot of it's electronic now with invoices and things. But if you have information coming in through mail, making sure you're not having just one person doing that type of that opening of mail and things is important. You know, one of the big things with check signers, right? Having the appropriate check signers for the business is important. Also, when signed checks, when the checks are going to the person that signs the checks, after signature of those checks, they should never go back to the AP person or the person that processed those checks, because those can be manipulated. You hear about the washing of checks now. If you send it through the mail, there's a lot of fraud occurring with checks now that are being physically mailed. Fraudsters are stealing those checks and washing the check and then cashing the check to a different payee. So again, lots of different things that can happen in a business then, and especially as an accountant, as an AP person that maybe has the opportunity to do it because they're getting signed checks back from the signer. Using a payroll service with direct deposit's important. You know, most of us, or really all of us at this point, you have online access to bank activity, bank statements, canceled checks. Having someone outside of the accounting process, you know, maybe preferably this person that signs the checks, having that person have access to that online activity, and just kind of periodically review that activity once a week for an hour or so, maybe once every 2 weeks. The key with that is perception back to the accountant or the business office, where that really someone's overseeing the process. So if someone really knows that they're being reviewed or someone's overseeing them, a lot less likely fraud will occur. You know, getting back to the check signers, right, like the vendor list and things like that, as well as, you know, what does that person get when they sign the checks? What do they get as support? Are they reviewing the support as far as invoices and support for that check? So making sure that's happening. We had that one fraud where the bank statements, the bank recs were not being reconciled timely. Again, having the month end being completed timely soon after month end and year end is very important. Having everything reconciled is very important. If you need help with that, you can go externally to get that help. So having that done on a monthly and annual basis. And then also too, having budgets in place where you're comparing actual to budgets. And if you're seeing some fluctuations occurring that maybe you didn't expect, having questions back to the accounting team, the CFO, the controller about, well, what's going on here is important as well. We have a bonus control here. You hear about all of the phishing fraud and the hacking and the hackers getting into systems with different email hacking and all of that. So, you know, what we tell our clients a lot is if you're getting a lot of that traffic into emails, you know, obviously training is very important to those employees not to quickly respond to that, you know, with different wire transfers and things. You know, what we say is really just pick up the phone and ask that person, did you really send me that email? That's the easiest thing you can do. And if that person's on vacation, because, you know, a lot of these hackers know when people are doing things, especially at higher levels, based on all the social media that's happening, then, you know, still have that person say, you can always reach out to me and ask what's going on, because we don't want this wire transfer fraud to happen in our business. Prevention techniques. So you can see the top is tips. We talk about this fraud tip hotline, which is really important for businesses to have. That is the most that occurs with the initial detection of fraud is on tips. You can see the others here. The sources of tips, you would think, you know, you would expect that employees, right, are the most, that is the source of tips. But you can see the others as well. So there's customers, there's vendors. So, you know, I think with this, not only do you communicate that you have a fraud tip hotline to internal employees, but you also communicate out to stakeholders, to others that are involved with your business, as far as customers and vendors as well. I have some of my clients that I get an annual email, and it says that they have a fraud tip hotline. And if you know of any issues as far as fraud or anything else, please either call, email, post a comment into the web system based on that. So it's not just internal employees, it's everyone that is involved with the business. You can see the different mechanisms here. And I think this has switched over the last 5 years. You know, previously, maybe 5-10 years ago, it was more phone related. Now it's more email and web-based now. You know, a lot of fraud tip hotlines, you can do whatever, you can do all three. So, you know, again, but you're seeing more web-based than email nowadays. So the most common is tips that fraud's being detected. The most source is employees, right? So having an anti-fraud policy is very important, and having a fraud tip hotline is very important in every business. Having the anti-fraud controls in place, lower the fraud losses, and it comes back to that duration of fraud. If you do have good anti-fraud controls in place, if you do have a fraud that occurs, it will detect it quicker. You can see here some of the anti-fraud controls. And you know, one of the things that I read in the report too, artificial intelligence is being used a lot. You know, obviously, probably with a lot more larger businesses and all of that. But in the next few years, using AI and all of that is going to be used more just in detection of fraud. So you'll see it saying it's going to triple in use. So it's going to be used much more. Those that have businesses that have had fraud occur, they obviously modify their anti-fraud controls after the fact. So that's being reactive, right? Let's try to be proactive with this and try to do a risk assessment and maybe enhance some of the controls in place. And then based on those changes in anti-fraud controls, 95% see an effective prevention of future frauds because of that. Communication to employees, everyone outside that is involved with the business is key. And then there is outside services that you can use with this fraud tip hotline. We refer a business it's called Red Flag Reporting to some of our clients. That's an outside business that we're not a part of, but there's others out there as well. It's not too costly as well. So if you do not have a fraud tip hotline, you may want to take a look at it. And if you want to reach out to me, you can reach out to me based on that resource with Red Flag Reporting. We spoke about data analysis. That's, you know, a lot of businesses are doing that right now as well. You either train internal employees, but maybe you do it, you know, maybe you hire somebody on the outside to help you that has the proper systems to do it and like, proper experience. But doing some sort of data analysis and data extraction is very key overall with the business. These are some of the techniques coming through. This is through the 2024 Anti-Fraud Technology Benchmarking Report through the ACFE. You can see some of the techniques. Nothing really surprising here. You know, exception reporting, like anomaly detection, right? So that goes with that data analysis. You can see the other ones here, but for the most part, a lot of businesses are really thinking of using technology with fraud detection. Here are some of the programs that are used. You can see in most of these, Excel is in there, but you can see other programs. We use IDEA for our audit processes and fraud detection. But you can see all the other Power BI and all the other programs that are used as well. The risk areas, no surprise here, really fraudulent disbursements is high on here. We also see, the procurement purchasing. You can also see the travel and entertainment expenses, which there was a few of fraud cases that came through on the questions related to that. So you can see all the different areas here. So the impact of fraud and the profile, we spoke about a profile of a fraudster, right? The impact of fraud. So it's significant impact because normally you don't get anything back, right? Maybe businesses have insurance and all of that, and they get some back, but normally in most cases, you either get nothing or minimal back on fraud, on business fraud cases. Because what you typically see with fraudsters is if they're going to steal, they're going to spend it. Right? They're not going to save it, put it in their savings account, and for a later day. They're going to spend it, and they're not going to have it any longer. So once that fraud is detected, they have nothing left. So again, that's the impact to fraud. The profile of a fraudster, we spoke a lot about this already. Profile. Most fraudsters, internal people in the business, makes sense, right? but the highest dollar amounts are owners and executives because they don't have that oversight. So making sure that you have controls in place, even for them, is important. And what's important there as well is having a fraud tip hotline, because if someone sees maybe something funny going on with a superior, they can anonymously reach out to that tip hotline and communicate that information. Tenure, we talked about this, the tenure of an employee, highest dollar amount, the more tenured people. And as I mentioned before, the reason for that is because probably likely they don't have any oversight. They have no one really overseeing them. There's not enough detective controls with their processes and procedures. There's lack of segregation of duties with them because there's a lot of trust there for that employee because they've been there for years. So having controls in place for them as well is key. The gender, as I mentioned, males are predominantly the fraudsters in business fraud. So the profile is kind of formulating a profile of a fraudster and then increasing your internal controls for that. Education. The people that have university degrees or higher steal more money and have more cases of fraud. Okay. The age groups, 31 to 50 years old, that's where you see most of the frauds occurring. 2/3 of frauds occurring within that age group. Probably comes back to that trust factor, that experience factor, right? So getting back to that, that's where you see almost the frauds. Collusion, having more than one person involved, again, you're going to have a lot more dollar loss because of it. It's very hard for businesses to combat that collusion because that's why you segregate duties. You segregate duties so you don't have the issues there, but if they're colluding together, then that's the issue. So understanding that, and then maybe potentially if there is some issues with lack of segregation of duties, having that oversight of that task and that those duties are important. I am finished. Okay, it's 1 o'clock, right on time. Thanks, everybody.